Hey guys, hope you're having a brilliant day. Hope everything's well. Welcome to the YTK weekly recap. I'm going to go through the pairs which I took trades on last week in regards to Aussie Yen, EURJPY, and XCI USD. Managed to catch some really good trades. And I'm just going to go through the reasons why I took those specific trades and the understanding on the thought process and the various confluences behind it. So let's get right into it. As you can see at the moment, price managed to, as you can see the order flow on price, you can see the structure of price creating significant lower highs and lower lows. So as you can see, price created a lower low, price created a bit of an accumulation right before price created a new lower low, and price created a lower high and a minor pullback and created a lower low, and created a lower high and then I was expecting a lower low. And I signified, for example, price reacting off key levels of supply, where you have these significant key levels, where you have this up candle prior to the down move, price rejected the bearish monthly order block, dip back down. As you can see, we've broken structure to the downside and we have massive pending liquidity below these significant monthly lows. So I was looking at, for example, these significant lows of price for us to be able to look for in terms of HTF targets. And as you can see, the previous month's low, where you can see the 71.735, that was the ultimate target. As you can see, we've broken structure to the downside. We've created an up candle prior to the down move. Price managed to dip into the significant bearish order block, this up candle prior to the down move. Price raided a significant monthly high. So as we took out that significant high on price, you can see the 75,300 level. For us to even create the retracement on price, we managed to raid the significant lows. So as we took out this significant monthly low of this flash crash that actually occurred, so the low got raided at 73.40. So as you can see, the order flow on price, you could automatically see the lower highs and lower lows of structure. We've broken structure to the downside in terms of a break in MS, retested the key supply zone, raided the significant monthly highs. So not only have we taken out the previous month's high of October, we've also taken out the high of September, which was 74,500. So as you can see, we raided each significant liquidity points of highs. So we're really looking for pending sell zones. But as you can see, price came into the up candle. This was the up candle prior to the down move. So as you can see, this weekly key bearish order block, this supply zone acts as a key resistance in price. So price dips into that level after raiding a significant high. So as you can see, price raided the previous week's high. So as it raided the 75,300 level, I was looking for immediate sells. I was hoping it would come to EQ of the significant block. And my actual downside target was actually this block in this weekly breaker. So I got out right at the right time. This up candle prior to the down move and this down candle prior to the up move. So you got double confidence on price. So as we raided that significant high, we managed to, for example, break below and reject that significant key level. So I managed to catch a top with barely much drawdown, to be honest. So which was quite a nice trade. So as you can see at the moment, I was waiting for a high raid of this significant block. So as we raided that significant block, we took out the significant high. On a H4, you can see the entry point. So we managed to come straight into the significant level of this 4-hour OB. So dipped straight into our level with barely much drawdown and dipped into our zone, and I literally sold it all the way down. So, and I put literally the stop above that significant level of price my invalidation, and we managed to catch a good 200 or so pips off that significant trade. So I can't really complain. So I've got a lion's share of the move, so I can't necessarily complain. And it was good to get out of that zone because we're currently retracing. So it's good to get out of that significant level of price, because as you can see, this was the up candle prior to the down move. This was also the down candle prior to the up move. So just like we're talking about in a weekly with a double confluence, I wanted to be able to get out from the significant move. So I managed to take the majority price off the table, and now we're looking to be able to push up. So that was the reason why I actually took that particular short on Aussie Yen. So sometimes you just got to take your profit and just bounce, you know. So it was pretty sweet entry, barely any drawdown, and the signal was distributing in a group of 2 positions. So, and also on top of that, the second position was normally of this hourly breaker. So as you can see, you know how to be able to get off the LTF timeframes. where you can see the price broke structure to the downside, retest the price zone, and manage to sell off. So you can get some very, very nice sales with these type of trades where you have like a 20 pip stop for 180 pips. So it's a nice 9R, for example. So as you can, these are the type of trades that you want to be able to look for in the market. So as you can see, prices rejecting our support zone. So now we're expecting a retracement back up. And it depends what price. For me to look for further shorts on Aussie yen for us to create a new lower low, I want to see what it does at this significant pivot zone of price. I want to see the type of reaction it gives off that level. If we can get a reaction of that significant level up candle prior to the down move, then we'll gun for liquidity pending below these significant lows of price. So there's quite a lot of focus around this pair, so I'm just going to see how price looks and see how it goes. So on EURJPY is a similar play on price. So as you can see, the order flow of price has been very simple, where you can delineate the significant lower highs and lower lows. So you can see price formulated a new lower low, price created a lower high, then price created a lower low. And as you can see, price created a lower high. So my intention was to sell the price back down to the lower low. With EURJPY, as you can see, this was the up candle prior to the down move. So we broke a structure to the downside. We closed below with a strong monthly close below the liquidity low of price of 118,720. Broke below that significant level. This was the last bullish candle which pushed price lower. So this monthly key supply zone, price managed to dip into that particular zone as a key level in price. So we took out the high of September and managed to reject the EQ of the significant block. So these significant lows were all my delineated targets of price, and heading towards these significant lows of the 114,850 region. So as you can see at the moment, you see on a weekly, price managed to dip straight into this key supply zone where this up candle prior to the down move, we broke a structure down to the downside where we closed below the liquidity low on a monthly, and also we had a strong close on a weekly below that significant liquidity low. We have a breaking market structure. Price managed to retest the zone and reject. Price came back up for the high and then creating a higher high, so I wanted to sell back down for the lower low. So as price managed to dip into that particular price zone, I was waiting for a rated liquidity above this significant high. So as it rated liquidity above that significant high, this was the block that I wanted price to find a key resistance at. So as you can see, price found resistance in that particular zone, this up candle. So it's the concepts within a block, up candle prior to the down move. Price dipped into the zone and was having a very, very struggle with the accumulation of price. So it was in a ranging bound environment for a period of time. On a weekly, the reason why I wanted to get out of price a little bit earlier than usual was because I didn't like the key support zone of this breaker. So this, as you can see, we have a it's not the best of breakers. It's an up candle prior to the down move, so it took out this low. So on a daily, I saw that. So I thought that was a delineated key support zone of price. So I said, as soon as price dips into the significant level, I want to be able to squeeze as much as I can from the market. So as you can see, when this significant high was rated on price, like I literally just put myself a few pips above, and I see price was just literally finding key resistance above that level. So I sold quite a few positions, and I had a few positions in from here. And literally, you could have compounded further positions back down, but personally, after I was in about 2 or 3 positions on this particular trade. So price dipped in the zone after breaking structure and a H4. So as you can see, price dipped into it, rejected that particular high, after which rated this high, and price managed to sell off. So as you can see, where you put your stop just above, we have stop loss, and you take 170 pips for you just over 3R. So this was the level of this particular block that I didn't want a reaction of, and that's exactly where the aggressive reaction came from. And that's when I managed to cut the trade and managed to secure my R for the week. So I was pretty happy with that. And getting in is one thing in the markets, but also knowing when to get out before price reverses is a key factor. So just delineate your key price points and understand which levels to be able to expect rejections or reversals from. And oil. Oil is actually one of my best trades because the real reason why I wanted to long oil is because I saw that it was pending liquidity above this significant high. So as you can see that this down candle prior to the down move, this down candle prior to the down, this down candle prior to the up move, price creates support of this significant level of price. So as you can see, we raided the significant lows. So price raided the significant low and found liquidity support along that significant line of price. So, and as you can see, price's open was 54.05. So it's a key pivot zone of price. So on a weekly now, you can see that price managed to break structure towards the upside for me. So as we had a key weekly support zone of this down candle prior to the up, this down candle prior to the up move, where this key demand zone OB was finding key support above that significant level. So as we wanted to take into consideration the structure of price, we managed to close above this significant high with a confirmed higher high, this down candle prior to the up move, this bullish order block on a weekly, this key demand zone. So I wanted a rejection of that significant level. So as we had a rejection of that significant level in price, I was expecting a move up. So as we create a higher high, the higher low, then we can expect the lower high. We can expect the high high, sorry. So as we broke structure towards the upside, as you can see, we've broken market structure. Let me get rid of all of this. So as you can see, price managed to break structure towards the upside, create a confirmed higher high. This was the down candle prior to the up move, which pushed price higher. This zone of price was expecting to hold, but this is where I really wanted price for an optimal entry. And on a H4, this down candle prior to the up move, I had a few buy limits. I had one a little bit lower than here, but this is one of my buy limits where price came into the H4 block, price dipped into the price zone and then rallied straight up. And my target was the 58 region because I wanted price to come into this daily block where I was expecting a Q reaction from for fear. So my 50, I put my TP as 58, just a little bit below just in case it misses it, and they managed to tag it. But I caught a little bit early at 57.60 or something like that just to take my profit for the week. And you can see the aggressive reaction that price gave off the H4 block. But even if you refined it down to a 1 hour block and got off strictly the 1 hour, you could have caught probably a ridiculous it's like 50 pip stop for like 450, so it's about 8R. So you can be able to swing these trades quite nicely. So if you can be able to utilize the lower time frames effectively with also benefiting yourself in looking at price from HF down to the LTF, you could really catch some really serious sweet trades. And you've got to be very, very patient because this period of accumulation was boring the life out of me. You know, just looking for accumulation points, but we managed to get back. I was looking for reload points like this H4 breaker, but obviously we didn't come back into it. And price just accumulated and carried on rallying towards the upside. So I'm glad to be out of trade. Managed to catch some very, very nice pips. And I've had a brilliant week in the market. So it was about, for example, 450 pips or something like that. And we had a fantastic week in the market, absolutely rinsed it. And hopefully we can get more to come. I hope you guys enjoyed the weekly recap. I'm going to drop more videos as time goes on. And I hope you guys had a brilliant week in the market. And let's get to our money and pips.